Okay, folks, good morning, welcome to today's live stream. You are not going to believe. You're not going to believe what I'm about to tell you. Sorry, I'm up a little late because I was up late, if that's just the truth, and my computer was not working. Yesterday, it was 70 degrees outside. Today, there's 3 inches of snow on the ground right now. Yesterday, I will repeat myself. It was 70 degrees outside. And right now, there's 3 inches of snow. And it's still snowing heavily outside. It's crazy what I'm seeing right now. Good morning, Ricardo, Tony. Bannock, good morning. Esteban, good morning. All right, we're going to go ahead and get started. No fancy introductions. Let's just open up in prayer. Father, we just honor you. We thank you for the opportunity to trade. I pray for your blessing, for your favor, for your wisdom as we trade this morning. Bless everyone here. In Jesus' name, amen. Yeah, it's crazy. We're in the Midwest. And it's just something to look at, man. All my plants are about to start budding, and we got, 3 inches of snow on the ground. All right, let's go ahead and let me get set up here. Let's mark out our levels that I want. We have Fridays. Yo, what's up? I think I remembered how to say your name. Signed Degen? No, I forgot. I forgot. Everything looks so weird right now. Did they update my account? What are all these blue lines on my chart? Oh, this is old. All right, so from a higher time frame perspective, daily, we closed below this level here. So if we want to see an expansion, we would want to see it stay below the previous day equal high. If we want to see a continuation of what we saw yesterday. Probably don't expect that until FOMC. So we do have a breaker that's forming right here. We've hit the high and beginning to sell off. I like this fair value gap that we have right here. Let's see if we can get that close here in 40 seconds. I'll put that up on the screen. It's simply that fair value gap. We got relatively equal lows right here. And it doesn't look like it's going to give it to us. We swept this low, so it took away my opportunity to take that inversion to the downside. We already swept below, so I'm not going to take that. Pretty sloppy as far as this morning goes. There's not a fair value gap. I mean, there is a fair value gap right here at 936 and another small one at 934 with a volume imbalance. I guess that's probably our first one. No, we got, yeah, 934. That's going to be our first fair value gap. Because of that volume imbalance, it allows us to put a fair value gap there. They are electronically trading sessions. They are intraday. You can disable the chart settings. No, I knew it was something like that, but I'm trying to figure out why that showed up on my chart because I haven't done anything with it. I don't even have the break sessions on here. Oh, okay, it's a new feature. All right, where do I go? I'm on settings. Canvas, maybe? No. That seems strange. Why would I want that? Under symbol. There we go. Tony, you don't have a fair value gap at 934? This is what I'm looking at. Oh, okay. I was concerned that maybe I had the wrong contracts or something was going on. Yep, I did. What? I don't understand. Why does it keep switching? Sweep of liquidity, we hit the equilibrium of yesterday's range right here. I like the idea of it pushing lower. Just want the opportunity to do so. That fair value gap was respected. Here's our London low. We'll mark out. And then midnight open. And then our new day opening gap. Yeah, I bet you the 2-minute looks better. It still ran. It still swept this low. So for my initial desire to take that entry there, it was removed. But it did come up and hit this breaker right here. Very small on the 2-minute. High, low, higher high. Broke low, came back up into it and sold off. And if I was on time and I saw this Asia high, and I saw this Asia high, I probably would have been more likely to take that trade to the downside. And it swept equilibrium of yesterday's range. Emmett, are you, Tala, have you traded before? If you're starting for the first time, start with micros. Start with micros. Just to get familiar with the process and the timing and everything. Don't blow your account. You've been paper trading for 2 months, okay? Nice job, Ricardo. Yeah, if you've been trading for 2 months, if you're going to get an eval account, start with micros. The only downside to that is you're going to be on a monthly cost. So unless you're ready to try to pass the account, you don't want to hold it for more than a month. There's no reason to pay a monthly subscription for an eval. You want to pass it right away. So if you're confident that you can follow your rules, you're not going to overtrade, you're not going to just take gamblish style trades, and you're going to follow your rules. Start with micros, making sure that you're comfortable with it, and then you can move up to minis to pass it. But if you pass the account, when you're on a funded account, only do micros. This is strange to me, why we're getting this. I'm going to treat this like we just made equal lows down here. No, we swept the low. What's the low on this one? The low on this is 706.25. 705.50. So we didn't make a low here. But I'm gonna treat what we're looking at as seek and destroy conditions. So meaning I'm not looking for continuations. I'm gonna look for sweeps of liquidity to go short and long. Did we grab a London low? London low's down here. So we never grabbed it, and we didn't grab the new day opening gap sitting right there. It's strange to me for it to do this. To me, though, it makes sense to go short, to be honest. Make sure I'm all set up here. I'm not going to do anything. We're going to be patient. This isn't my model. There is a breaker right here. It's just a little messy. It works. Let's see how this candle closes. I do like that there's a breaker right here. And it's the first fair value gap. There's also a breaker right here. I just don't know why we stopped before we came. We swept the lows, and we have a new day opening gap that we didn't tag. The only thing I didn't put on here is our opening range gap. So let me grab that real quick. All right, so we filled the opening range gap. That would make logical sense. But I still don't like that we didn't run anything here. I mean, even on the higher time frame, I'm looking, we want us to stay below previous day equilibrium. We're inside consolidation. We swept highs. We didn't reach, I guess, we haven't reached equilibrium of yesterday's range, so we could go higher. We have a breaker on the 4 hour. We have a better breaker on the 1 hour right here, right at equilibrium. That's interesting. Look where equilibrium is, or look where the low of this breaker is. It's right at equilibrium. That's really attractive. So if we do want to go higher, I'm interested in taking a short right there. I mean, it was crazy yesterday. We're getting phone calls from our school saying that school's canceled tomorrow. And it's 70 degrees outside. That was just crazy. All right, so we're going to have a close above the first fair value gap. I'm willing to take a quick long on this. See if it goes. Stop needs to be moved to break even. All right, so that gave us 20 points there super quickly. Now I'm getting ready to take this short here right when we hit this equilibrium. $19.35. It didn't give it to me. Come on. All right, so it just tapped me in. Let's see if it can pull back. Give me a slight pullback. All right, I'm going to let that go. I'm not going to let it run against me. But I like the pullback right here. The fact that I just had a 20 handle win in a flash and then I'm taking that second trade right after kind of felt rushed even though I planned on it. So that's kind of the reason for not getting back in or selling it. It gave us 10 handles. That's exactly what I wanted to see. So 10 handle win on the rejection of that equilibrium, previous day equilibrium. And that's all I would try to do because there's no way you're going to hold that trade with a bullish candle like we just saw. No way. But it did give us 10 handles. And that's kind of what I was looking for. So that's totally possible to do trades like that. And as you guys have noticed, I've started to do more of those. But that was a 20 handle win on that inversion to the upside. I still like the rejection here. I really do. I guess we could go higher. Did we? Yeah, we. This is a 15-minute SIBI. It's a large fair value gap. Yesterday's fair value gap is still open. That is the first fair value gap, isn't it? Right at 934, is that correct? Is that what you got? Since it's Monday, I don't have a problem putting that on there. Look at that tag. Get called, Tony. So if I had a preference, if I had to choose the equilibrium or the first at the top of the first fair value gap, I probably still would have done equilibrium. Just because I've seen us run into the first fair value gap before. It did give us 10 handles. But now we're waiting for more structure. We need more structure. We could see it come back down to this breaker. Wouldn't that be cool? No, I mean, I guess it would be here on the 5 minute. That's crazy. I'm not going to do that. Let's drop down to the 30 minute. Let's see if we have a sweep of liquidity. Oh, well, yeah, we do. We could look for a 3 minute. All right, it's 10 a.m. right now. This technically is a long right here on the 3 minute with a 30 minute sweep. It overlaps with this breaker, which is not bad. We just didn't read. We still haven't come back down and touched the highs. We haven't come back down and touched the highs. So I'm gonna let this play out here. I'm not gonna try to chase that. I'm gonna wait for it to come back down, and then maybe go long from here. Okay, the hourly sweep of liquidity, new candle, 5 minute entry from here. We got a 5 minute. Yeah, this is also the 5 minute potential entry. So right now, I'm looking for us to get back down into this fair value gap. 3 minute overlapping with a 5 minute fair value gap. It's gonna look a little messy. I really don't like it coming back down here anymore. Main reason is we've created a swing low, and if we come back down here, I honestly would be looking for a breaker. So I don't want us to run this low. So we need to find another 5 minute fair value gap for us to come back down in, or a 3 minute fair value gap to see if it will give us one maybe there. But I don't like it. Today's bias is bearish towards ES daily fair value gap. maybe in the PM session. And honestly, I was bearish as well, but we obviously wanted to reach higher. So we still have this pretty large range right here. 4-hour range that we're in. So we could keep working up into that. The body of this breaker is sitting right here on the hourly. That looks attractive. It's overlapping with the new week opening gap high. I like that. It would mitigate most of this hourly candle. So this is an hourly breaker. Anchored to the body. Let me get that out of the way. It's kind of annoying. I'm not taking any trades right now. Sitting. All right, so there's the breaker. Let's see if it pushes right through it or if it respects it. This is also a daily order block. I like this area. Nice reaction again. That gave... So drawdown of about 8 handles, but gave about 15 handles for a pullback from there. The thing about it is it's first exposure, so you can't take it if you don't take it right away. Because it doesn't act the same once it does it the first time. So you can't take it again. That's not how it works. Holy cow. We've had two blizzards here in the last month. Been crazy. What are we reaching for? What are we reaching for, guys? Are we reaching all the way up here for London highs? London from March 18th? Are we reaching for opening price? We just tagged that. That's 9:30 open. $9:30 open was right there. I need to wait for a market structure shift. Market structure shift is down here, this down close candle at 10:08. And then if we want to change in state of delivery, I like them on the 5-minute. That's way down here at the previous equilibrium. One hour breaker. I don't know when you put that up there, JR. Sitting here looking for, finding out what key level the market wants to pull back on. So far, 9:30 has been respected from yesterday. But we have, it could run higher for London highs. London highs are sitting way up. We got a lot of room for that. You know what? You know what's not on here anymore? Is the opening range gap from yesterday. So it would have been from here to roughly that low. So this is not on there. So maybe 50% of this opening range gap would want to be filled. All right, so there's our market structure shift. There's no fair value gaps in here. I don't know if I like it. Not enough. We did dig into a 3-minute. We just need to be patient, not take anything unnecessary. Not enough structure here for me to know where it wants to go. Ranging inside the new week opening gap. Yeah. Nothing to see here. Nothing to see. Nothing fancy, I should say, or worth noting. All right, let's see if we can get out of this range here. I mean, it's a small retracement. It's not a what I should say, a reversal type. These aren't reversal candles. This looks like retracement candles for a further expansion, or it's just consolidating. It's one or the other. We are in between 10 and 11, so we could be consolidating, but this is not reversal type candles, at least right now. Do I like trading during FOMC? You know, the greedy side of me says yes. The other side that says no, preserve your capital, says no. That's the truth. I gotta take a picture. I gotta show you guys. I don't know how I'm going to get this to you. I could just put it on screen. I don't know if that's going to show, though. Put it in front of my face. Let's see if that does it. Look at that, guys. We were getting almost green grass was about to pop up, and now that's what I'm looking at outside. And you can't really tell from that picture, but snow is falling sideways. That's why I keep looking over there. Okay, so you see these two green candles that look like, oh man, we might do something with this. And then you see a red candle, a black candle coming this way. Don't do anything with it, especially when you're inside the range. So what's our range? Our range right now is, let me give it to you, this high to this low. I'll just do it like that. So these green lines, okay? This is our range. Anything inside this range, we don't want to mess with, okay? When we get a wick outside of it, we can adjust our range. Or we can also view it as, are we going to start manipulating and running lower? So you would want to see something like this, something like that, and then aggressive movement toward the other direction. But when you do it all inside here, don't touch it. Don't touch it. It's not beneficial to you. Equilibrium. So typically what you can see is price. It could go like this. It could touch equilibrium and then start going higher. It could run lower, touch equilibrium, and go lower. Okay? But you want to see that break outside of this small range. And just because it breaks outside of it doesn't mean it's now going to start running. We just start looking for more information. Look for more information, more structure to tell us what may happen with price. But right now, this is saying stay out. Don't do anything with it. The trade opportunity was the inversion that we took to the upside. We sold at 20 handles, but it obviously, I mean, look at that. We could have gone long. I'm going to remove these. I'm just getting tired of seeing all this boxes everywhere. Do we fill that opening range gap completely? All right, I'm going to delete that. I just want to get rid of stuff because I'm sick of seeing all these lines here and all these boxes everywhere. All right, I'm done with that first fair value gap. I don't care about that anymore. I really don't care about that breaker anymore. We'll keep 930 on there. Okay, so from the entry that we took, we got in long right here. We sold 20 points in less than a second. That one candle went up to 30 points. And total, it went 95 handles, 95 points. So the inversion model, as you can see, this yesterday, it tapped me out twice. It ran in my favor, came back, tapped me out, and then continued. But here's an example of one where it doesn't tap you out and it continues. So it just has to be a low resistance type move, and you can be very aggressive on these. All right, so we swept that low and now we went back inside the range. So we have two options. From here, we're identifying, does price show signatures of expansion? Okay? Does it show signatures of expansion? If not, if we just are messing around and we're just sitting in here and we get back up into this range, then we're going to move this down to here. And we're going to expand that range. Expand this consolidation range. Maybe it starts expanding, maybe it doesn't. But that's what we're watching for. Is does it expand? Where do I live? I live in Nebraska. The great state of Nebraska in the United States of America. Here's a 5-minute long. It's our first 5-minute retracement. I like that. I really do, actually. I don't know if I want to take it, though. I think I'm going to pass. I don't need to take it. I don't want to take it. There's going to be a cleaner setup, a better setup. I'm looking at this being a rejection for a higher move. It's the first 5-minute that we have here. And the hourly is giving us a potential move here. So we have a sweep of liquidity here, expansion candle, and then we look for a 5-minute entry here. A 5-minute entry. So after 10 o'clock, we want to find a 5-minute entry. And this is our first 5-minute entry. So this is a long based on the 5-minute or the hourly reversal. But if I'm honest with you, I don't quite trust it right now. It absolutely could work. And if it's going to work, I'll take an inversion to the upside. But there's nothing. Whoops. There's nothing here. There's no fair value gaps there. I am on June contracts, yes. The 15-minute fair value gap might work. Is that what you're referring to? That's pretty low. Yeah. I mean, it makes sense for it to go back up here, to be honest. It really does. I just have chosen not to mess with it. I mean, look at the 5-minute chart. Okay. I mean, unless it wants to just drop straight down before FOMC, it makes more sense to find support here and come back up in here. That's what it just makes more sense. So that's why it makes it a decent trade for 10, 15 handles. But I'm not going to take it. There'll be a better setup for me. And even if, let's just say you win on this one. If you win on that first one here, I mean, it's already given you 15, almost 20 handles. So you could have gotten a 10 handle trade out of this. All you need is 10 handles. All right, so we're going to delete this consolidation range. I can't believe I missed that. Do you guys see the breaker to the downside? I didn't see it. Right there. Tick to tick. Down close candle. We finally broke below it. I wasn't paying attention, and we wick right back up to it. And nice large displacement. I just wasn't looking, wasn't paying attention. I kind of checked out when I said I wasn't going to take this 5 minute. Thinking to myself, I'm just going to have to wait more. I'm not interested in a big short, to be honest. I guess we could. We could just range. My hands are cold. Why is it a breaker, Adam? Breaker has a high, low, higher, high. So we have high, low, higher, high. We then run that low, and then we come back up and tag it. That's a breaker. You scalped it? Way to go. Nice job, Tony. I'm cold. I'm cold. I need to stay warm. Yeah, I'm happy with that quick win. That I don't want to take anything else unless something really nice stands out. All right, let's see if this candle closes below this 5 minute. Yes. Sure. I have 8 seconds to see if it closes below it. If not, we'll have a new 5-minute candle inside this fair value gap. That's bringing more support to price higher. There's not a single fair value gap in this price leg move higher. I think our conditions are changing for the afternoon. I caught the 95 tick on paper, but I took 2 losses before the move, so currently break even for the day. Hey, journal what you did right on the 95 and journal what you did wrong on the 2 losses. Turn those into lessons. I should get my drone out today. Take some pictures outside. It would be beautiful. Once the snow stops, it's going to be like a winter wonderland. Annie, am I trading minis? No, I'm trading micros. I shared yesterday kind of where I was at on my trading journey, on just where I'm at, what my successes are, what my struggles are, and why I'm still on mini contracts. I kind of basically outlined that yesterday. Will probably be another opportunity for a breaker. At least some type of reaction somewhere around there. Around the body of that, if it comes up to that level. I mean, just looking at how these candles are forming, they're overlapping, that if we did hit that, we could probably get 10 handles out of that. All right, we're back. We got about 5 to 10 minutes before the 11 a.m. macro begins. But probably going to be a lot of sitting here this morning simply because of this price action that we're seeing. Look at the candles that you're looking at. I see a ton of wicks, a ton of overlap. Show me where our last fair value gap it was. Where is it? It was on the incline. It's way over here. Last fair value gap was 1006. It's been 30 minutes without a single fair value gap. Done for the day, but I'd be looking for buys in this beautiful FOMC day. Yeah, it's good to be done. JB, are you still on here? If you are, I'm seeing your message here. JB, tell me if you're still on here. I'm not sure you are. I'll answer this while we're on stream. I like this first fair value gap for an expansion lower to this level here. If it will give it to us. We got 25 seconds. That's decent. No close. We're not going to take it. Inside there. See that? We finally got another fair value gap, folks. There it is. Woo! Yeah, this breaker would have been nice. It just you would have had to hang out through this a lot of consolidation. I don't like when we make equal lows. Even if we close below this now, I'm not as interested in it. Doesn't mean it doesn't happen. It just becomes less appealing. It did most of the work already. Do you see what I'm saying? Did most of the work, and it's leaving a wick, which is not a very aggressive candle. So that doesn't make me want to take this. Because it's going to close below it. I'm not going to take this because it could just run the other direction now. You going to go outside? Have you already been outside?
What?
Have you already been outside?
No.
It'll be fun to go outside.
Yeah. Are you still doing your work?
Mm-hmm. Close the door, please. All right, so that trade would have worked out. That's okay. I don't need to take it. That signature that it gives with that little wick right here, or that big wick with the close, it just doesn't make it appealing as much anymore. Because if you think about it, we're in a market maker sell model. Yes, it could work out. But my entry, if I was going to participate in this, should have been up here. That's where that market maker entry should have been. And then I ride the wave of all of this price action and then sell here. That's what should have happened. They're going to go shopping in 15 minutes? That's funny. That's true. All right, we're in the macro time. I'm going to sell on this retest. See if I can get 10 handles out of it. There's a volume imbalance that's right here that I'm okay for it to reach up before, but I don't want it to go any higher than that. The retest was based off of this breaker right here. So this is what the breaker on the left-hand side that I'm looking at. That was the idea right there. I don't like those candles. They always make you feel like it's going to go in your direction, but then it just goes back up and moves higher. Oh, I'm not showing the trade. I'm sorry, guys. Here's the trade that I'm in. It's based off this breaker on the left-hand side, and I don't think it's going to hold. It may hold. Let's see what happens. Keeping the emotions out, letting it just play out however it wants to play. Honestly, it should be a little bit higher here. I'm going to move my stop to break even if we can get below this low, just to protect my profits that I have so far. Equilibrium is right here. So we haven't quite hit it yet. Stops at break even. We're going to go ahead and close that. Got 10 more handles out of that trade. I think that's going to be it for me today. I don't think I'm going to take another trade. That would have ran to target. I probably played that trade a little early. Looking at it, I took that trade right when we came back up and hit this level there. I could have waited for the body. That would have been an option. You could have, if you wanted to be really conservative, you could have waited for you to hit back up into that fair value gap, but that's not likely. Not likely to. The probability of it doing that every time is pretty low. But played out into the first fair value gap and the range. The main reason why I took profit is when this candle, let me show you here. If I extend this to the right, we ran that level right here. So this candle, which I still was holding this position, hit the equilibrium and then bounced off it. And so when we came back down and we're hovering right here, that's when I was like, I'm just going to take the position. I'm just going to take the profit and not have this completely run and stop me out at break even, because we are already at equilibrium of this entire range. So it basically 50-50 is how I see this, especially if we don't just go right through it. We eventually do, but it was already really slow price action that I think it's just better for me to wait. Yeah, and there's a bullish breaker right there. Yeah. There are multiple reasons. But for sure with this the first fair value gap, this is where I'd want to start taking profit. In here. Today and tomorrow is bearish to play out in the 4-hour internal to external liquidity. Here's the 4-hour. I honestly think this low is our internal liquidity and our external liquidity is over here. That's how I would personally see that. Yeah, I think we could run lower. We're still sitting at this breaker. I like that for potential move to the downside. I like that. And I can totally see where you're coming from. Internal here to external down here. Yeah, I like the breaker right there for the 4-hour. Way to go, Bannock. What makes a fair value gap? Great question, Nick. Let's go to a very obvious answer. Look at these 3 big down close candles. Candle 1, candle 2, and candle 3. The fair value gap is the candle 2, outlined by the low of candle 1 and the high of candle 3. So here's the low of candle 1, and here's the high of candle 3. That's the fair value gap. Does that answer your question, Nick? Oh, yes, that one, that's a little tricky. When you have a... So if we were to mark this out, this is the fair value gap. Really, really tiny. You see that? That candle's at 789. This candle's high is at 7825. So this is 3 ticks of a gap. But when we look at the high, we have another gap right here. So you need to include that volume imbalance. That's why that's that way. Because here's the deal. If price is going to come through into here, it could disrespect this fair value gap, that would be right here, and reach for this volume imbalance and then reject. So you just include it as part of your analysis. So we have a fair value gap right here. So if you're outlining this fair value gap, you're going to go from gap to gap because there's a space on the top and a space on the bottom. So you would engulf all of that as your fair value gap. So if we scroll this over, you'll see that price is hanging out inside of all of that. It's just a way to not get tricked out when price runs for those volume imbalances. I don't know if ICT's ever talked about the first fair value gap based on the 2-minute. That's my only concern with that, JR. Is everything he's taught when it comes to the first fair value gap has always been related to the 1-minute time frame. Now, since price is fractal, I'm sure you can jump up to the 1 minute or to the 5-minute, 10-minute, 15 minutes, 30-minute and do the same thing. But I haven't studied that. Two trades today, 30 handles. We're going to call that a win. We're going to call that a win. I am going to do a video. I've had so many people ask me to do a tutorial on setting up an Apex account. So I'm going to be releasing a new video, setting up an Apex account and also connecting it with TradingView. So I'm going to be uploading those videos here probably in the next day or so. But do you guys have any other videos that you want to see? When you make so many videos, it gets difficult to just make content. What would you guys want to see? What content would you like me to teach on? Charis, video to compare breakers, mitigation, and propulsion blocks. That wouldn't be a bad video. Yeah, I can look into that. Folks, I think we're going to call it a day. We're going to call it a day here. I know it's only been an hour and a half, but I think that's good. I think it's wise to just jump off and walk away. 2 for 2 today. We had one break-even trade. I think we did. Did we have a break-even trade? I can't even remember. Anyway, I just know we had 2 good wins, and I'm up green on today. So we're going to walk away, call it a day. So stay safe. We'll be back here. I will be back here tomorrow. I'm not gonna trade FOMC today. I might watch. Maybe I will. That might be fun. With the weather, I'm not going to be going anywhere. I don't know. I'll think about it. I maybe stream. Let's gamble. Let's gamble. Let's demo ball. Let's demo ball today. That might be fun. Yeah, I know some people will trade both sides of the move before it actually opens, and they'll try to pass eval accounts that way. They'll take one account long and one account short, and then basically expect one of them to pass. I guess you can do that as a trade. I'm just not going to do that. I don't know if I'm going to stream today. I don't know. I mean, it sounds fun. Maybe I'll do it. We'll see. I'll get back to you guys on that. So I know I do have some new content that I want to talk about, though, in a video, and it's going to be about it's going to be something the Lord's been teaching me in regards to patience and understanding our identity in Christ. It's been really good just to talk with him about that. So there's a lot there that I want to teach, that I want to help people understand, and especially in the context of day trading. Patience is something that is very difficult for a lot of people. And I feel like the Lord has given me some clarity on some things that I want to share. So we'll be doing that here soon. If I forget, which I have forgotten things in the past, just drop a comment in the chat and remind me. But it should be good. Last little bit before we get off here. That looks not horrible. I would prefer it to go here, give me a retracement, and then run. And then your target would be these highs right here. Your target would be the breaker right here. So it doesn't look horrible. We're having a nice little move here, but I definitely would like to see a retracement before we run that high. My accounts are closed, so I will not be taking anything. Cyrus, we just like to go crazy during FOMC. Man, I can tell you how many times I think of FOMC, CPI, NFP, and I'm like, man, big candles. I could become rich. And the only thing that's happened is I go broke. And that's why it's just like I don't want to do that kind of stuff anymore. It's just not appealing. What's up, buddy? Sure. Anyway, we're going to call it a day there, folks. Good luck on this trade if you're taking it. I told you what I would like to see before it actually happens. If it closes above right now without a retracement, that seems a kind of sketch. More likely that it runs this high and then it retraces. So anyway, guys, God bless. Stay safe. Good trading, and we will talk to you guys soon. Take care. God bless.